investors are turning their attention to the 902 billion naira Treasury bills auction despite a week of sell-offs. The Debt Management Office plans to roll over 2.9 trillion of maturing bills based on the second quarter Treasury bills calendar. Traders at Axis Bank expect a calm session today. Tobechukwu Ikpe, Treasury Team Member at Axis Bank, joins me now for a market update. Tobechukwu, thank you for joining us today.
Thank you, Esther.
All right, let's start with the DMO's 902 billion T-bill auctions today. Talk to us about market expectations around rates that we could potentially see and subscription levels.
So we always see healthy appetite for the Treasury bills auctions. It's one of the highest returning investments that anyone can make in Nigeria at the moment. So we expect healthy subscription for this auction, especially 1 year Treasury bills. The last one closed at 19.63. And general expectations for this auction, when they're offering 902 billion, is like to close around the same levels, but do a little bit higher due to the bearish sentiments we've seen in the secondary market lately amid global risk-off sentiment. So general expectations for the auction today for the 1 year Treasury bills is between 19.8 to about 20.3%.
Right. All right. Let's continue. I know that, of course, with the effect of the escalating trade tensions, especially between the U.S. and China, investors are a little wary at this time. We've seen, of course, a flight to safety. But talk to us about how that's been impacting or continues to impact Nigeria's fixed income market.
So the way that impacts the fixed income market is that they say a lot of the fast money, or some are calling hot money investors, foreign portfolio investors, which are made up of hedge funds, foreign banks, and some other global asset managers who are investing in Nigeria to pick up the attractive yields in the fixed income market, decided to sell off late last week following the liberation day tariffs that Trump announced. So following that announcement on Thursday, Friday, and Monday, we saw strong sell-offs in the fixed income market, which led to an increase in the yields from secondary markets. OMO bills, which they mostly like to buy, were trading around 20% at the start of last week, but today as we speak, it's around 23%. So those sell-offs were followed by purchases on the FX, as I said, flight to safety. They are selling their fixed income investments here, buying FX and exiting the country. So we saw that impact the FX market as well, which has been largely stable for months now. Trading around 1,540, we saw depreciate around 5 to 6% week on week to trading today at 1628. So that has impacted both the fixed income markets, leading to an increase in yields, and the FX markets, which has weakened the naira against the USD.
And for the rest of the market activities, talk to us about what we can expect for the rest of the day. Let's talk to us about, especially at the money market, liquidity levels at the market, and on the bond yield curve, where you're seeing the most action.
Oh, for the money market, largely what we've seen is a liquid market since last week, although the liquidity is declining gradually as banks make some payments to CBN. We've also seen some CRR debits earlier in the week, which has taken out some money from the system. But we expect the market to close fairly liquid today, although with slight increments in rates ahead of the Treasury bills now around 2 billion settlement tomorrow. So depending on what the DMO sells today, that will impact liquidity levels going further into the week, and that will impact how we see the money market rates. For the bond market, that has been largely quiet. We've not seen large moves there because most of the foreign portfolio investors who are not invested in that section of the curve, they largely bought short tenor instruments, the bond instruments from 5 years to 20 years, not many investments. And so we didn't see sell-off on that market. It has been largely calm and quiet. I'll bet weak sentiment, not many buyers as well. So largely the bond market has largely been in a stalemate, and we've seen slight increase in rates, but not too aggressive, with the on-the-run bonds trading around 19% levels now.
But there has been talk about, with where oil prices are right now at the international market as a result of the effect of the trade war between the U.S. and China, around $61 per barrel today. And of course, Nigeria's oil benchmark at $75 per barrel in the 2025 budget. There's been talk about increased borrowing going into subsequent quarters. What are your thoughts in terms of the volume we could potentially see?
So the DMO has been trying to manage the borrowings from the local markets. The finance minister recently said that they will shift their attention to the foreign markets. But the truth is, with this decline in oil prices due to global macroeconomic sentiments, we've seen Brent drop below $60 per barrel today for the first time in years. So, and the budget benchmark is around some $5 per barrel for the budget. So that increases the fiscal deficit for the government. So they would have to borrow more if these oil prices are sustained at these lower levels. That will increase the fiscal deficit, and the DMO needs to think about how they will fund their deficit. They have been trying to cut down their borrowings on the shorter tenured instrument, the Treasury bills. So we've seen that, for example, today over $1 trillion is maturing, but they are offering just about 900 billion. So we'll see them use a tactical management strategy where, depending on money market liquidity conditions, depending on where yields are, they can decide to either borrow more at every point in time or sell less if they don't like the rates that markets is bidding. You can also see that at the last bond auction too, where they largely undersold the auction due to the high bid rates that we saw there. So they will manage the rates and they will use a tactical approach to fund the fiscal deficit. But the truth is that if it continues going on into the year, we could see further weakness in the FX market, especially as that's one of the key indicators of how the Naira is valued. So we may see further depreciation there.
Tobechukwu, thank you so much for that insight. Tobechukwu Ikpe, Treasury Team Member at Access Bank.